Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Today is May 27th, 2026. And before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. My guest today is the CEO of Standard Uranium, a uranium exploration company and emerging project generator poised for discovery in the world's richest uranium district. It's Jon Bey. Great to have you on the show.
Hey, Jesse, great to be here. Thanks for inviting me.
Absolutely. I want to start by discussing your current assessment of the uranium market because we've seen a ton of volatility lately, which could be cause for concern for some investors. And yet the fundamental drivers behind the sector seem stronger than ever. Is that how you're reading things? And what is your overall assessment of the sector right now?
Yeah, I would say you're bang on there. The fundamentals have never been stronger. We're looking at a market right now that is just poised for a major breakout. And I think we were getting and going in the right direction through the fall and into January. We saw a nice move from the spot price once again moved up from the 85 right up to over $100 again. And then we had the incident where, the U.S. and Israel invaded Iran. And that has really cooled things off, to say the least. It's a spot price has come right back down to $85, and it's been sort of treading water for the last 2 months. So we all know that, retail investors, high risk, high net worth guys, they're looking at this and they're really risk off when these kind of things hit the macro stage. So I don't think it's any implication on what's happening in the global uranium market, because I think all of the fundamentals are pushing towards a market that is completely pushing towards undersupply for decades ahead. And we really need to address that going forward.
Yeah, I think that asymmetric bet to the upside is the strongest, perhaps, in uranium out of any commodity out there. The supply deficit continues to be glaring, and there's simply not enough new projects advancing to production to fill that gap. Do you think this means the price has to go a lot higher to incentivize new production? And ultimately, where do you think all that needed uranium is going to come from?
Yeah, good question. Let's step back a little bit, because I think investors sometimes get confused a little bit about the two different markets. So we have the spot market, which is a number that investors see on a regular basis. Daily, it's put out there, and we have the long-term market. And the long-term market is one that most investors don't follow, but that's really the critical one. That's the market where we see the contracts from the utilities setting those contracts with the producers, and those go out years in advance. And what we are seeing is that long-term price has gone upwards significantly. It's now, some say, right around that $92, $93, up from high 80s just a few months ago. So it is constantly steadily moving upwards to a number is probably the highest it's ever been. So that is great to see. And the spot market itself has some volatility, bouncing around between 80 to 100, back around 85 today. Those are the numbers that investors see every day, but they really need to keep an eye on what's happening in the long-term market. And you can see those reports come out from certain individuals who write reports from the uranium space. They'll put those out monthly, so you can sort of track the long-term price, which is a key one. Now, I think I sort of wandered off from your question, so maybe fire that question back at me again.
Yeah, you answered the first half of it, and the second half was where are the needed pounds going to come from?
Yeah, that is a great question as well. And when we look at where are the pounds coming globally right now, there's a number of different regions. So Canada, obviously, the Athabasca Basin, we've got Cameco's Cigar Lake and McArthur River, some great pounds coming to the market. And then you look to the U.S., we've got 4 or 5 companies that have entered into production phase again. Small numbers, I think probably less than 5 million pounds coming out of the U.S. right now across 4 or 5 companies. And then you look over to Africa, we've got stuff happening a bit coming out of Niger, and you've got Namibia, which is stepping up now, it's in production. And then you've got over in Australia, you've got the big mine there where uranium is a byproduct. It's not a uranium mine, but it's a byproduct of BHP's mine there. And then you look into other parts of Russia and Kazakhstan. Of course, Kazakhstan being the world's largest producer, producing 40% of today's uranium. And then we've got, Uzbekistan and a few other nations in that region. And then you look to, where is that demand coming? And it's everywhere. Everyone around the globe outside of a few countries are really pushing towards wanting nuclear as part of their energy mix going forward. And that's not just the large reactors, which we're accustomed to. It's also the future of the small modular reactors and micro reactors. So it's a very interesting time. And I think the most bullish time in history, where we've got uranium really pushing to be a big part of the energy mix. 440 large reactors operational, 70 under construction, another 100 proposed or planned, and more even coming into that mix every day.
Yeah, great summary there. And speaking of Kazatomprom, both themselves and Cameco have had production woes recently, and several projects attempting to ramp into production have also faced issues. What are the biggest challenges you see out there in the uranium mining business, and how can they be overcome?
Well, let's start off simply. Mining is difficult. It's not just a simple process. And every project you watch, when you see results come out from the companies putting out their news, I can't recall any of them ever saying we're overproducing more than what we anticipated. It's always the other way. We aim to get to a certain number and we're either just under or under even further because complications come up. We're seeing bottlenecks with, whether it's sulfuric acid in Kazakhstan or whether it's people can't get the qualified miners trained up to do the work they need in Saskatchewan because it's a real bottleneck. I mean, when you shut down mines and bring them back on, you lose workforce. You've got to train new workforce, and it's a complicated skill to get these workers trained up. So we're seeing, workforce problems. We're seeing resource problems. You're seeing just the complications of building mines and executing on timelines. And then, of course, you're coming into the government regulatory problems that come up. And sometimes you even face issues with First Nations in certain parts of the world who've got to put their hand up and they want better deals that can slow things down. And we're seeing that as some projects try to get from development stage to producing stage. So there's so many different complications that can slow things down and really cause issues for these companies trying to advance.
Now, AI data center buildouts have kind of been front and center in the news cycle as of late. And if the US, of course, really wants to be a leader in this race, they're competing with China, who is building out all sorts of energy infrastructure. They've got a goal for, I believe, 150 reactors by 2035, some incredible number. And they're actually taking action and building so many reactors right now. So with nuclear being front and center is one of the better options, do you think the AI arms race could have an impact on uranium demand moving forward?
Yeah, that's a really good point. And let me back that up a little bit. When you said China is planning to build 150 reactors, they made that statement a few years ago. And not only did they make that statement, they are executing it beautifully. They're now building 10 reactors a year, and they're building them on time and on budget. They're able to build a large nuclear reactor, a gigawatt reactor for, under $5 or $6 billion, and they're doing it in about 5 or 6 years. Those are staggering numbers. Okay. Now, China moving ahead like that, the rest of the world is trying to follow suit. The U.S. has seen themselves, about to fall behind in the nuclear build-out phase. For decades, they've been the leader. They have 94 reactors operational right now, and Trump does not like falling behind anyone. So, when the rest of the world said at COP28, we want to triple the amount of nuclear going forward for the next 25, 30 years, Trump said, you know what, we can do better. We want to quadruple that. So they want to go from using 50 million pounds to over 200 million pounds by 2040. Now, those numbers are staggering, Jesse. And to hit those, they've got to start building and building fast. So we did see them come online last year with Vogtle in Georgia. 2 reactors have come online. It took them a long time and they were way over budget when they did it. But that's what happens when you build one reactor every 30 years. Like the Chinese are doing, you got to get a flow going. You got to build multiple, get your systems down, and prices will come down and timelines will get better. And that's exactly what I think the U.S. are doing. And I think we can watch very closely for what's going to happen in the next few months. I anticipate the U.S. is going to announce the build out of several more large reactors, potentially up to 10 in 2026. They might announce to start construction.
Give us an idea of how Standard Uranium plays a role in the overall uranium market. Could you start by giving us an overview of the company and letting us know what the game plan is for the long term?
Yeah, for sure. So look, we are pure exploration in the Athabasca Basin with the project generator side business. So we started this company back in 2017 with the mindset that the world is going to be heading towards more nuclear and more uranium is going to be needed. And there's just not enough projects found yet to get taken down that development phase. So our goal is to go out there and make discoveries, take that discovery right up to resource stage or PEA stage and sell it off to a mining company. So that's what we did. We built the company around our flagship Davidson River project. We started adding more projects from 2020 when we took the company public. We now have 10 projects on our portfolio. But the key point is Davidson River is really the flagship for a reason. It has got massive potential. It sits in the southwest corner of the Athabasca Basin, right next door to Paladin's Triple R project and then NextGen's Arrow Rook 1 project. That region, the southwest corner, in my opinion, is going to be the most exciting region in the world for decades to come. As you probably know, NextGen got their final approval to start construction to build their mine and their mill. That construction is ongoing right now. It's probably going to take them 3 to 3.5 years to build that out, and they'll be into production. Also, we've got Denison advancing their project. They've got their final approval. So, look, in the next 3 to 4 years, we're going to have 2 fully operational mines in Saskatchewan. And don't be surprised to see Canada the number one spot in the world for uranium production. So that's great to see. Now back to Standard, we are looking to make discoveries. Our goal is to make this discovery on a uranium project, advance that up, and put it in the hands of a mining company. So look for us to really focus on exploration as well as project generator, and that's another topic we can touch on as well.
Absolutely. And as I mentioned at the top of the show, today is May 27th, and some news hot off the press coming out of Standard Uranium. Why don't you fill us in on that?
Yeah, so I mentioned Davidson River as our flagship project. We've been trying to get back there for 4 years to drill it, and we've got some really good news. Like we put news out a few months ago saying we were going back, we were going to drill it again this summer. I've been marketing for the past 2 months, really talking the story to investors around the globe, and our current shareholders and new shareholders really look at that project and they think it's so great. They want us to really hit this project really hard. So they've asked us to expand the size of that project. So we're taking it from the 5,000 meters, which originally was funded and planned, to a significant increase. I'm not going to put a number on that, but we're pushing to go, north of 8,000, maybe higher than that even this summer, depending on, how many meters our two drill rigs can go forward. So it's exciting. We've got the drills on site right now. Our geologists get up there in the next few days. Drills will be spinning. We'll be drilling all through June, July, and August with the goal of making, a major high-grade discovery like the ones across the street from us at Paladin and NextGen. That's what we're trying to do.
Talk to us about the project generator aspect of the business and the strategy there.
Yeah, so going back in time, we started off as pure exploration. We started acquiring new projects, and when we acquire it, we stake it for fairly cheaply. We do the work on it ourselves, and once we got to a point in probably about 2022, 23, we had about 12 projects in our portfolio, and in Saskatchewan, you have to work those projects to keep them in good standing. So when Sprott came into the market and created their SPUT fund, it really had a really major impact on the uranium market. The spot price went from $50 to about $110 in about, in less than a year. And that really caused a lot of interest in uranium and the Athabasca Basin, and a lot of companies that may have been precious metals or lithium or whatever else companies wanted to become uranium companies, and they wanted to be in the Athabasca Basin. So that caused a massive flood of new companies coming into our region, our home, where we have projects and wanting to get projects. But look, if you're going to do the work in Saskatchewan, you've got to have a number of things going for you. You have to have, relationships with your First Nations partners, and they have to be good. You have to have the ability to get permits from the government, which can take time if you don't know how things operate. You have to have the workers, that is the vendors, the drillers, the helicopters, the camps. If you don't have those things, you're not getting a project off the ground. And then you have to have uranium geologists that actually know how to do the work there. We have all those things going for us. So for us, we saw an opportunity. We had an opportunity to take some of our second tier assets, put them up for a JV opportunity for another company, and really move quickly to get those monetized and get those projects advancing. And when we announced we were moving to project generator, within 3 months, we had 3 deals signed and drills were spinning on all 3 projects rapidly. So a really good opportunity for new companies coming into the basin looking for projects and looking for a team that can operate and run them for them. And for us, a way to advance those projects that probably would have been not getting the love they needed from our own dime. And our shareholders are happy to see those projects advancing. Multiple drill programs happening this year. 3 programs on 3 different projects by us this year alone. 2 of those funded by our JV partners. And it's a beautiful model. And I can get you into details of how that JV model works if you'd like to hear more.
Yeah, definitely. Dive into the details for us.
Yeah, so a typical earn-in project with us, we'll put a project up, and when it goes up to the market, what we'll have done already is about 2 years of exploration work on it. We will have it drill ready to go, so we will have the drill permits in hand. We will have the First Nations agreement signed in place. We'll have all the vendors lined up and our team of geologists ready to run the project. So a new project coming in, say you ran your own uranium or company and you wanted to get into uranium, Jesse, you would come to us and I would open up our curtain and say, here's the projects that are available. Pick the one or the ones you like. And we'll start discussing that. Once we pick a project, we'll say, here are the typical terms we offer to these companies. And it's a 3-year earn-in. So in 3 years, if you pay us the amount of cash and shares and pay for all the exploration work and pay us to operate that project, you can earn 75% of that project, and we'll keep 25% with a 2.5% NSR going forward. So it allows these projects to move forward. The companies coming in see a great opportunity to have another talented exploration team run the project for them, as long as they are good people, credible people with cash, and away we go. Now, this not only moves these projects forward, it also gets the First Nations in those regions pretty happy because they're getting paid the royalties on that. They're seeing these projects get advanced. The vendors, they love it because they're getting work across multiple projects. Sometimes when times are tough, it's really good for them to have steady income and steady work going. For us, those non-core assets are getting moved forward. As I mentioned, you have to keep every project moving forward with spend to keep them in good standing, or else you have to give them up, right? So that's how it works. And so far, we've done 5 of those deals in the last few years, and they're working beautifully.
And you mentioned a 2.5%, I believe, NSR, net smelter return. For those who are unfamiliar with that term, could you break down how that works?
Yeah, basically how that works is if this project goes into into production down the road and there's profits to come out of that, we'll take a 2.5% profit of the overall profit on it.
Got it. Now, I'd love you to shed some light on the team behind Standard Uranium, how you plan to use their expertise to advance your projects. Maybe let's start with yourself and your own background in the industry.
Yeah, sure. So I got into the resource space over 2 decades ago. I started off entering a group called the Hamilton Resource Group in Vancouver. So they had an umbrella network with about 10 companies under one hood. So it was pretty interesting because when I entered the space, they had, copper, they had gold, they had silver, they had uranium, they had oil and gas, and a couple other companies that were even smaller than that. So for me, it allowed me to get my feet wet in multiple sectors there, learn the space. And I was with them for 3 years, really, really cut my teeth in gold, diamonds, and uranium. Forum Uranium was the group in our portfolio. So from there, we got to that year of about 2008, 2009. The markets kind of really got rough, and some of those companies really imploded. So I was lucky enough that one of the companies in our portfolio, the oil and gas company called Gulf Sands Petroleum, really took off. So I sort of headed in that direction for a number of years. We had a big discovery in the Middle East. We had oil projects over there that were doing well, and then right up into the Arab Spring, the macro story got really bad for that area. So we pulled out, and I was brought back into the mining space. And that was around 2016, 2017 when we started Standard Uranium. It was my first role stepping in as the CEO and chairman. So cut my teeth for 2 years privately. And then we took the company public in 2020, and we've been advancing Standard Uranium ever since.
And any light you could shed on other team members in the company too.
Yeah, for sure. So one of the things we did when we started Standard Uranium was try to make sure that we had a good mix of board members that were not only capital markets from the legal side, but also people who had a uranium experience. So the first 2 directors I brought on board were Neil McCallum from the DeRouge Group in Edmonton. Neil's got 20 plus years of exploration, leading projects in the Athabasca Basin as well as in Quebec. A fantastic geologist. And we also brought over Garrett Ainsworth from NextGen Energy. The day that Garrett left NextGen, he joined Standard Uranium as one of our original directors. Now Garrett's gone on and started another uranium company called District in Sweden right now, but he's still a close friend and a good supporter of Standard Uranium. On top of that, I added Ken Judge and Blair Jordan, both corporate lawyers and capital markets experts. So those guys great to have on the team. We also have Doug Engdahl from Saskatoon. He's a CEO of a company called Axiom Exploration. They're heavily involved in exploration projects around the world, but specifically in Saskatchewan as well. And then we have Mike Young. Mike Young's based in Calgary, currently runs a coal company, but for many years he was the CEO of Vimy Resources in Australia. People in the uranium space in Australia know that company quite well. And then we have Vivian Chiang, who is our CFO in Vancouver. And of course, the person I'm getting to is Sean Hilliker, who is our president and VP of exploration. Sean also came to us from NextGen Energy. Garrett brought him over from NextGen to sort of lead our exploration team. He's been with us since 2020, since we took the company public. Sean actually, spent years working on the Arrow deposit. He wrote his master's degree on it. A lot of the technical information in their feasibility study, Sean wrote. So when we brought Sean over to work on our Davidson River project, it was essential that we had somebody that actually knew exactly the type of rocks we were looking for that he saw over at NextGen's Arrow project. So Sean is a great addition, fantastic in the capital markets as well as being a geologist. And he's added another 3 or 4 uranium geologists to our team in Saskatoon, where our technical office is. So as I mentioned, we have a small team of uranium-specific geologists, all based in Saskatoon. We run all our projects. And it's great to have that asset because people are really a hard, commodity to get in the uranium space.
Absolutely. Now, you spoke about Davidson River and the plans there. There's some other news flow I want to discuss because back in March, you completed an inaugural drill program at the Corvo project. In May, you also completed an initial drill program at the Rocus project. Why don't you walk us through those results and the plans moving forward for those projects?
Yeah, so those are two of the JV deals we signed in 2025. The Corvo one is with a group called Aventus Energy out of Vancouver. The Corvo project was the one they really liked and they wanted to get into it. It's got some, high grade uranium right at surface. So this is the first ever drill program completed on that program. So we went up there. Our team ran the project. We had some great results, getting mineralization in multiple holes of that program. We are still waiting on assays, Jesse. So assays are pending. They've been sent off to the lab. People can go through the news release and get into more details on the results. But overall, a really good success for the first ever drill program on Corvo. And I can tell you, Aventus is itching to push not only into year 2 of that program, but into year 3 so they can earn their 75%. So watch for news on that coming out. The second project is the Rocus project, which we kicked off right after Corvo, and that was with a group called Collective Metals. So both those companies are earning in on those terms I suggested before to earn 75%. Rocus, once again, was the very first drill program on that project, and exciting to get the results coming back from the assay labs as well. So I know the guys at Collective Metals are itching to move into year 2 of their earning deal, so watch for news on that in the near future as well. Assays are pending, so another great catalyst to see those assays come back from the lab.
And what about the company's cash position at present? How much cash on the balance sheet? How much runway does that give you? And what are the plans to raise more capital as needed?
Yeah, so first of all, today is May 27th. We had news out this morning. We have launched a $4 million capital raise. So that is going to go on top of the cash we have in the bank right now, which is $3.5 million. That'll put us at $7.5 million. Maybe we'll take a bit more on top of that if we oversubscribe this raise. But the goal is to really focus on drilling Davidson River this summer. That is going to be a program that's probably going to push north of $5 million to drill this summer, and could even be higher depending on how the drill program is executed and what the results we're seeing. So we anticipate when the drill program is completed, we'll have a few $1 million in the bank to sort of take us through the fall and really analyze those drill results and hopefully get into something quite juicy. So pretty good cash position. We're happy with where we are. Our shareholders are happy to support the program we're going into, and they want us to expand Davidson River drilling, and hence the case for adding more capital to our till right now.
And is there anything else you wanted to mention about the company? Perhaps something you'd like to emphasize? Anything we haven't touched on that you think it's important for shareholders and potential shareholders to be aware of? Any other catalysts that could be upcoming for Standard Uranium? The floor is yours.
Yeah, I think when you look at what this company is trying to do, our big win is a major high-grade discovery, and we're going to push all our chips in to make that happen this summer at Davidson River. We believe this project in the southwest corner is the best project in the hands of our company right now. We think it's a phenomenal project, 31,000 hectares, a 15 million market cap, some companies surrounded by billion-dollar companies. If you look at that map, Jesse, of the southwest corner, you can see where we are, this massive land package. Just to our south, we have Orano, a $30 billion company. Cameco to our north, $70 billion. You look over, we've got Paladin, $5 billion. NextGen, $12 billion. Denison, $5 billion. And here we are sitting there with this beautiful land package about to be drilled again. And it's pretty exciting times for us. On top of that, we've got news coming from our JV partners on the assay results coming back, and the other portfolio of our projects. We've got a few more that are up for JV right now under CA. So watch for news on new deals getting done on future projects, and all those projects drive cash flow into the company as well. So it's exciting times to be a shareholder of Standard Uranium. If you believe in the exploration story and believe in Davidson River, this is a remarkable time to get invested with Standard Uranium.
Well, I'm going to put a link to the Standard Uranium website as well as social media so people can follow along with the company, those assays pending from those drill results. That'll be very exciting. Jon, thank you so much for coming on the show.
You're welcome, Jason. I will add one more thing. Look, our company does a phenomenal job on social media. We've got our in-house team of videographers that will be at site at Davidson River all summer. So watch for constant news flow. Watch from our geologist, Sean Hilliker, giving the investors updates of what's going on. And he does a great job giving little TED Talks, explaining what's happening at the drill site, what's happening in the core shed, what's happening when you're running an exploration camp. So pretty good videos for the investors that want to learn about the company, want to learn about what it's like to run a drill program. Follow along at Standard Uranium on Twitter, on any other social feeds, and you'll see our story live.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.